So good morning and good afternoon again. Welcome to the WOCCU and ACCOSCA COVID-19 webinar series. This is Susie Cheston from Washington, D.C. at WOCCU. George, are you on and with connectivity?
I'm on. Good morning and good afternoon from different quarters. Can you hear me?
Yes, perfectly.
Thank you. Welcome to the whole group for webinar on liquidity management, a joint webinar between World Council and ACCOSCA. As one of the series that we are trying to work to see that the movement across the continent globally are actively involved in terms of response to COVID-19. And thank you, Sue, for organizing these two.
You are welcome, George, and we are so excited about the great content that you've worked on for this. Thank you.
Thank you. So with this, I know we have a number of people in the meeting. Welcome you all. We'll begin by requesting our chair, Cambridge. Cambridge, are you there?
Hello, I'm there, George.
Yes, Cambridge, just to give a welcome remark in regard to the current status. I know he has a brief on other things happening in various quarters. Welcome, Cambridge.
Thank you, George, and good morning and good afternoon to everyone who's attending this webinar. Well, on behalf of ACCOSCA, maybe it would be prudent for me to thank WOCCU. Susie, thank you so much for coming through for us. It is very important that at some point in time, we get to have such a conversation amongst ourselves. Maybe as a few comments, well, the effects of the COVID-19 would be dire to all SACCOs in terms of the liquidity challenges if we were to consider the anticipated job losses and increased delinquency. This then calls for action from all to act in a manner to minimize them. As ACCOSCA, we appreciate this conversation where we share information on how to deal with these challenges. I know that currently we are all doing something to keep our SACCOs afloat across the continent as we continue to engage with our regulators and members. Now, as ACCOSCA, we encourage such engagements. I'll briefly tell you about us here in Eswatini, what we are currently going through. I think the standard lockdown is also experienced here, save that ours is sort of partial, which means the essential services are operating and the others have closed down. But now there are very many restrictions, especially when it comes to movement, for this to emphasize on the social distancing. But our regulator has written to the security forces to allow our members, the staff, and the SACCOs to operate so that the disturbances are minimal. We appreciate that, and I think that is a very good move for us, which will also help us to be able to be on the ground to understand and see what is happening with our SACCOs at this point in time. Now, we encourage that kind of spirit in all the regions, so that at least we know that after this, because it will pass, we have existing SACCOs, and it's important for us to have our feet on the ground. Now, I think it is also important to note that in our situation, the government decided to categorize the businesses into two categories, one being the high risk businesses and the other being the low risk. Fortunately for us, the cooperatives were ranked under the low risk, which meant it would be operational. SACCOs would continue to operate, obviously, under the current guidelines, safety guidelines imposed by World Health Organization. I think for us, this discussion is very, very important, because we all know that as cooperatives, our main aim is to deal with money, is to deal with liquidity issues. So we need to sort of understand that if we have challenges because of what I've just mentioned, how then do we deal with them going forward? How does the other people in the other regions plan to deal with this, particularly coming from WOCCU? I think there's a lot we are going to gain with my team here. Thank you so much, George and Susie, for putting us through.
Thank you, Cambridge, and for delivering that message on behalf of ACCOSCA. So for this particular session, our focus is mainly to look at various strategies or tactics that we can develop to support our core mandate of reaching out to the membership across the continent. And we are relying heavily on World Council experience globally to help us perhaps in mentioning some of the things that have been tactfully done across the globe because of their experiences in various scenarios. Not COVID. COVID is a little bit different, but they have advanced experience in this particular area. So we'll begin straight. First, I'll explain again, as usual, when we have webinar, when a presenter is speaking, you will continue doing the muting and then unmuting. We have various speakers, as you heard in the program, and I'll be there in case somebody wants to speak. Kindly find a way of engaging by, you could send a text, a message. There's a chat session. At some point, we'll also have a polling, the usual polling we normally have. And keep in mind that the webinar is being recorded and will be used as one of the ways to support our knowledge management sharing across the globe and within Africa. So I'll just begin straight on by mentioning a couple of things about Africa, particularly pre-COVID-19. Looking at liquidity management, I'm keen on trying to explain or highlight some of the key features that were projected by IMF, African Union, African Development Bank, the key players that support the economic development of Africa. The projections that were done in 2019 to show Africa as a continent that is growing in 2020. Perhaps consider the youngest continent, being that our average median age stands at 18 to 19. There's been a huge potential across Africa. In the past decade, our economic growth has been an average of 6%. But 2019, the key reports that we are having from African Union, OECD, African Development Bank, there was projection that 2020 we are going to have an economic growth of 3.9%. This is huge because it's way, way different from what we've observed in other parts of the globe. And again, I've used the generation dividend that we have, that Africa is a young population. One of the fundamental things about the economic growth in Africa is for the past decade, there's been a lot of shift from the usual consumption spending to investment spending. The trend has been pretty good, and part of it is a contribution from the credit union, what we refer to as SACCOs, to educate people on the financial viability, to look at the need to get into investment spending rather than consumer spending. Before this, at some point, there were various groups that would look at the southern region as having more consumption levels higher. East Africa was following closely, and West Africa was way, way down in terms of consumption spending. And there are various factors that will have contributed to that. But in regard to just straight on the point on the projected economic outlook for Africa 2020, before we had the scenario of COVID 2019, the highest growth has been expected in the Eastern Africa. For a while, this has come to 5%, but it was projected to be 4.9%. The second part was Northern Africa with 4.1%. We had West Africa at 3.7%, Central Africa 3.2%, and the Southern Africa 1.2%. Remember, Southern Africa before even COVID-19, the economic growth was way below 1.0. I think it was coming to 0.7. This perhaps again, I'd like to explain the reason for that is the continent is shifting. 50% of economic growth now is attributed to investment expenditure. Investment expenditure could be what you have indicated our SACCOs are doing. We are spending in buying houses. We are spending on small, medium enterprises. What World Council, for instance, is now doing their project in Kenya, Burkina Faso, I think is Senegal. And this has been a trend running across the continent. So we felt the need, ACCOSCA and World Council, having that outlook, definitely we are affected. And one of the key things that we need to think of to remain relevant, how do we support our governments using the SACCO business model? How do we support our members using the SACCO business model to ensure that the investment spending continue to rise more than consumption spending for the benefit and stability of the continent? So that is just a brief to set up into the discussions that we are going to have in this particular session. The last one, as I do this, I know with this kind of discussion, you'll realize that we have a lot of skills mismatch and the different levels of development in terms of the financial inclusion and access across the continent. So we'll begin our presentation by having Rafael Courier from World Council giving us a brief scenario of post-COVID-19, looking at various levels, because it's a high time we look at it in that way. The short term, the medium term, and short term, medium term, and the long term. And these help us develop the right strategies to handle this. Then we'll also have John help us look at the contagious funding plans that perhaps will support SACCO liquidity management. After that particular session, we'll have 3 different inputs. For one, from Emmanuel Kofi, who is the CEO of the National Association of Ghana. His main point here will be just 1 or 2 minutes. Just explain what is the impact of SACCO COVID in terms of affecting liquidity in Ghana, knowing that before COVID-19, Ghana was already facing some issues surrounding liquidity in the country. Then we look at another briefly 2 minutes again, Fode from Gambia. Fode now has been engaging with the regulators in the Republic of Gambia, one of our models in terms of Africa looking at a small country but achieving a lot in terms of having an impact. How is the regulators supporting them to see that they are managing their liquidity well? And then one of ACCOSCA technical directors, Fumbani, will then provide us with a response broadly, because of his experience. He can go straight to Malawi, but he can mention a couple of responses. And they'll have an opportunity to respond based on Rafael's presentation and John's presentation. Then the longer version of these also will have a detailed discussion with some polling questions on the financial cooperatives, how they're dealing with the liquidity downturn. And Babuka Juf will give us just briefly, again, very briefly, how they're dealing with this particular situation. Then the second one there will have a case by Solomon Angutse to perhaps tell us how we can work together. The power of cooperative, one of the key principles of the cooperative, to work together to manage liquidity in these during these tough times. So with that brief, we'll finally have a reflection of John. John will respond to various points that we've all indicated, from Kofi's presentation all the way to Solomon's presentation. So with this, we'll begin straight with the Raphael presentation. Thank you.
Thank you, George. And thank you for all the attendees today. I'll take you through the business scenarios post COVID-19. And I'll start directly with the situation as it is, in terms of the impact. And generally, as it has been observed, by both Cambridge and George, definitely we expect to be hit, and will be hit. And basically here we are saying we have seen run of deposits, especially from affected sectors. These are sectors related to aviation and others like horticulture, tourism, and also transport. And some of the impact we have seen is the regulator have tried to come in and try to salvage a situation. So whereby we are saying things are being done differently. It's not business as usual, because you find a case scenario like for Kenya, the regulator is requiring SACCOs to file daily liquidity reports. This was not the case before. Then you find there's also the requirement to do monthly loan reports. This was not the case before. It was being done quarterly. Also, you find there's reduced lending, because if the economy takes a battering, then definitely no much production takes place or investment. Consequently, another issue is that the issue of the savings culture is distorted, because when you're talking of job losses, when you're talking of shrinking economy, then people tend to focus more on putting money into their pockets so they can be able to feed. So it distorts the savings culture. And this means the members are not able to build on their savings. At the same time, at the business level, it is anticipated, definitely, the interest income will shrink. Why? We are talking of delinquencies, we are talking of restructuring, also we are talking of reduced lending. At the same time, you'll find some employers will have issues with cash flow, which has, it has been experienced, and mostly in line with the critically hit sectors. So that means remittances to the SACCOs will be affected. It's important to note at this point that the regulator has taken all these strategy and directives in order to avert a financial meltdown of SACCOs. So having said that, I'll go to the next slide.
Conference call, video conference call, yeah.
Yes. So what are the short-term strategies, that should be adopted in order to ensure that we maintain liquidity, or basically also improve it? So some of these things are, some of them that you are seeing highlighted, we have already discussed them in previous webinar, and they are known, but we thought it's good we share them as we delve into long-term, and also the tools as will be shared by June. So ideally, we are talking of, we continue to inform the members on the need to obey directives. Also our areas of operations, that is within our working areas, let us ensure they are safe, so that our people, including the members, are protected from the disease. Also, we're talking of offering moratorium to existing borrowers. This is to ensure that they're able to cushion themselves against their obligations, given they have taken a battering as far as their jobs are concerned, and also the economy. Also, we are talking about disbursing the emergency loans that maybe will last for a month for those clients and our members who initially were not in arrears past the pre-corona period. Also, we need to engage the employers and other remittance holders to do it promptly, so that we are able to clear pending bills. The dividends payment, most regulators have indicated they should be paid even without the AGM having ratified that. And also stop all in-person training and personal meetings in line with the directive of social distancing. We'll go next to the medium-term strategies. And here, we'll be talking about ideally coming up with innovative products. And this is leveraging on technology. So we are talking of the mobile banking. This it has been shared before. Also, I'll share a case with Kenya, whereby the Central Bank of Kenya just recently, last week, they gave a directive that CRB, that is Credit Reference Bureau, SACCOs will be allowed to access and also share information on that platform. So that means another fintechs, they have been denied that access. So I'm talking about the policy changes whereby we are saying innovation can come in so that SACCOs can fill in on that sector, because now they have the advantage of accessing information from the CRB, which means the risk management of the loans is mitigated at that point. That's an advantage whereby they can develop a product around that line. Also in terms of business expansion, as shared earlier, I think by CEO of Cusco, the issue of brick and mortar, I think it's high time we change that scenario and use technology to expand our business. At the same time, we need to keep our clients informed of what we are doing for them through SMS and social media. We also need to communicate productively with our funders or the funders that have basically, they are our creditors. We have borrowed money from them. So this is the time to ask for waivers and also ride on any government programs that has been put into place to deal with the crisis. There is the CRL, for instance, in Kenya, the cash reserve ratio, it has been reduced. That means there's much liquidity. And the government has gone ahead to indicate those loans will be approved directly by the central bank. If indeed the SACCOs, they are strained in cash, I'm sure one of the other ways to borrow directly from the banks because they have that liquidity. And basically those loans are on concessionally rate. So that will help the institution to remain afloat. Most importantly also, we need to relax with the regulator, it has been discussed before, to relax on the provisioning and the compliance as expected, because the pandemic has created some distortion, especially in terms of provisioning of loans that have gone bad. And also one more key thing that has been shared by Cambridge is we need also to push for the government to recognize SACCOs as an essential provider in the financial sector, because you're talking of transforming livelihoods, and maybe it's even have one of the savings and loans. It carries quite a huge chunk. So I'll go direct to the long term, and this is where the situation that the institutions need to look at, because we have seen the pandemic, the way it has hit us. Not only is it affecting the present, it means also in the future, then the way we do business, we must change. And here we are talking about having scenario and stress testing as far as liquidity management and is concerned. And this will allow the institution, more so the executive, to assess the degree to which the forecasts and the assumptions that we have as they are working on the liquidity will be affected by downside events. The downside events include the pandemic. Also, given the pandemic has happened and we didn't expect it, there are also other issues that are downside. We have had, especially in our continent, the issue of drought. So these are some of the things that now we are saying, moving forward, we need to have these scenarios and test them against our liquidity, so that now we're able to know what are our cash flows and the credit facility available in regard to these downside events. Then we need to look at the impact of the same in terms of these downside events on the institutions to meet the obligations. These are in terms of more in terms of their cash outflow. Then we need to see to what degree, now like the pandemic has happened, to what degree are we exposed? And this can only happen now if you are doing long-term scenario and stress testing of liquidity. The other angle in terms of managing the same, which is a long-term strategy, is looking at the contingency plan. And here we are talking about ensuring that we can go on to the next slide, Connor. Yes. So here we're talking about a near-long liquidity stress forecast. So this means it's not a medium term or a short-term forecast. We're talking of a horizon of over 1 year. And this will allow management to improve their strategy in terms of the creative measures that they take to satisfy their cash outflow obligations. So we are talking about having a trend where we have extended liquidity and forecast that goes beyond 1 year. And then this forecasting needs to be tracked and monitored on a monthly rolling basis so that we know where we are. And most importantly, it will provide greater transparency into significant cash outflows. So this tracking and monitoring is to ensure that we're not caught flat-footed just in case a downside event happens. And even if it's not to happen, we already have mitigations in place, and we already know what to do next. Then lastly, on the last measure, as far as long-term strategy is concerned, we are talking about coming up with a contingency plan. And this contingency plan is, as June will elaborate, is what will form the tools that will assist in terms of coming up with the right strategy. And here, we are talking about the guide through which various liquidity scenarios will assist the management to access the various liquidity risks that are there, but most importantly, in terms of the threshold and the outcome. So here we'll be talking about the minimum cash and the liquidity balances that an institution should have so that to deal in with any downside event. Also, we are talking about coming up with the permitted funding sources, because you find some sources you might access, they might hit you when we're in a situation of distress. So are we talking of equity? Are we talking of working capital? Are we talking of concessional loans? So these are some of the things that executive needs to look at. And also, tied to that, you're talking of the capital expenditure permissions. To what level? To what extent are we able to expedite money on capital expenditure? This also oscillates around the available working capital, and that's where the issue of the mix and the funding sources comes in. Because at any point, we need to know what working capital do we have to do our business. And related to that, we're talking of operation expenditure reduction strategies, because at this point you find some of the first measures to take place, of which most people have done it, is the operation expenditure reduction. So are we talking about now, in terms of the staffing, how do we go about it? In terms of even the meetings, how are we going about it? But most importantly, even as we talk about these liquidity contingency plans, it's important to note that with the current status of the institution, a lot of capacity building needs to be done for the SACCOs, and that calls for close collaboration with the regulator to ensure that we are able to have this capacity and ensure we're able to practice the same. So I'll go to the next slide. And here we are talking about the recommendations that we have in place. And the recommendations basically here are based on the quadrant. And we are saying, is the time to recapture? Is the time to replan? Is the time to respond? Is the time to rebudget? The SACCO movement is basically for people. We are there for the livelihoods. We are there for social security. We are saying, is the time to be ready for the future? We need to play the victor role, not the victim role. And that means leading from the front in terms of guiding our members, innovation in terms of the products that we have. We also need to constantly communicate with the members, and this has been emphasized in the other webinars, so that because they are key to our survival. We are talking of members who are our clients, we are talking of employees, we are talking of the regulator, we are talking of the government. And also now we are saying it's the time to come up with the various channels of raising funds. And most importantly also, we have to develop contingency plans that are beyond 1 year. So having said that, we need to segregate the good and the bad costs, and that talks about cash inflow and cash outflow. And as indicated before, we need to, anything that is spending our cash, I think we need to stop it at this point, so long as it's not tied to the business, the clients, and for this case, the staff. So I think I'll stop at that point.
Thank you.
And allow John to take over. Thanks.
Thank you, Raphael.
Thank you.
and the contingency plans, and try to relate that for the continent. That a third of about I'll ask John to proceed on with this presentation.
Hello, can you hear me?
Yes, we can. Thank you.
Okay, well, anyway, greetings to all, special greetings to friends in Malawi. I saw that Fumbani is a listener, also friends in Ghana and Gambia and Kenya. Special thanks to. I'd like to thank also USAID for paying for this, and ACCOSCA and WOCCU to set it up and organize it. I will follow up on what Raphael has said. I'm Jean, or Jean, or whatever. Doesn't matter. So next slide, please, Connor. I will dive in. Time is money. So to begin with, as you know, like SACCOs, credit unions, current asset size in Kenya, they go from up to above 5 billion shillings, and quite small. They differ in their business model. Some are more community-based, exposed to all economic sectors, exposed to everyone. Some are more share-based, employer-based, linked with specific sector. I know of the deposit-taking SACCO, for instance, in Kenya. 50 of them are linked to farmers. So, and they're quite large. So again, depending on where they stand in the supply chain or the market, is their market disrupted by this COVID, or is their supply chain? Are they importing goods from China or other places? And so each SACCO is a bit different in terms also of prudential norms. Some of them have healthy balance sheets, some of them not so healthy, struggling with capital, liquidity. So this is why, you know, regulators put caution out there and put regulations. So in SACCO, for instance, in the SACCO Act, Article 13, for the taking SACCOs, it's very clear that the board of directors is responsible for preparing, reviewing, adjusting, and monitoring a liquidity policy. Well, a liquidity policy is basically a policy that enables the credit union to service its members' needs, mainly deposit withdrawals. And also the board of directors is responsible for preparing, adjusting, monitoring a contingency plan, which appointing a person responsible for liquidity management, whether it's a committee, asset liability management committee, or the CEO, and appointing a person to access funding for liquidity. Okay? Next slide. So, as you know, COVID-19 has caused triggers challenging liquidity management from all sides. From the systemic, possibly there's a declining asset values. I don't know about the housing, I don't know assets in your country. Economic indicators, George has spoken at the first Africa was set on an uptrend. Now I hear different stories. Possibly unemployment will go up, other economic indicators, growth will go down, the rotation of money will go down because people are not earning, spending, so the whole rotation cycle goes down. possibly in some countries, smaller, larger financial institutions will go down. So all of it can create conditions that are difficult for SACCO. When you put that also with the SACCO specific or credit union specific triggers, like the man that I'm seeing on the picture is not me anyway. So when you put that with triggers, difficulties specific to SACCOs can be asset quality, as you know. Loan recovery will be more difficult, so provisioning will go up. Maybe there will be more share and deposit withdrawals. Possibly the credit union was counting on accessing a funding from a donor or from a lender, and it's not there anymore, or the terms have changed. Possibly there's some losses that will eat the capital, and the loan demand will shift. Okay, so what to do about that? This is the reason why we usually have a contingency funding plan, which is my next slide. So usually a plan has like two parts: the goal, objective, and the requirements. So the goal is basically to the goal is to prepare a framework to assess, measure, monitor, and respond to funding needs caused either by the systemic triggers or caused by the SACCO or credit union specific triggers. When we speak of laws and regulations, so the plan also should state that all activities of all employees, officers, elected officials of the credit union should at all times be in accordance with laws and regulations. Also, it should be coordinated with the different other policies. So this plan will not conflict with the other stated goals, policies, and plans of the credit union. Like, you cannot have a contingency funding plan that says one thing and the loan policy that says other things. We should be aggressive or lend to specific sectors, or you cannot have it with the different savings policy or capital policy. At the same time, the minimum requirements. So minimum liquidity balance. So which level of liquidity will be maintained, and it will rely on which funding sources. And those funding sources have to be liquid and have to be spread over specific periods. Then there should be some stress scenarios that are run, cash flow analysis with different stress levels of severity. So it will depend a bit on if you apply a 10% downturn, a 20% downturn, or a 30% downturn on deposits and or loan repayment, and over which period. So the result should be either green, yellow, or red. Green, we're okay. Yellow, will have some trouble. We have to identify new funding sources, or red, definitely longer term sources of funding. The line of authority. So in the case of the plan, in the case of a contingency, as you're living now, who will activate the plan? Is it the CEO? What will be his or her report to the board of directors? And it is the board of directors which has the authority to assess and review the plan. The funding sources. So make sure that funding options should be as diverse as possible and as multiple as possible. And also review for availability frequently based on short-term, long-term maturity. At the same time, regarding activation, monitoring, and review of the plan, so the CEO of the credit union should report the liquidity situation weekly to the board of directors or to the committee. And those people, the board or committee, will review the effectiveness of the plan. So slide 4, the next one, is regarding a contingency plan. We spoke of stress scenarios. So one, you should have the first one, which is your normal variation in cash flow. So if you take all the inflows, the main ones are deposits and loan repayment and maybe remittances coming in. And the main outflows are depositor withdrawals, loan disbursement, and the expenses, which is mainly the salary of your employees. So when you do inflows minus outflows, you have a type of variation. This is usually funded by cash. Then if you run a stiffer, like a more difficult scenario, let's say you have a drop of 5 to 10% in either deposit or loan repayment or both. Then the variation that will come at the bottom, inflows minus outflows, will be larger, bigger. And this is when it's usually funded through investment. Those investments can be short-term, long-term. You try to match it. Renewable, it can be in bonds, in investment with banks, monthly, quarterly. So again, you match it. Then if you run the, again, stiffer scenario, let's say you have a 15 to 30, 40% drop, like a dramatic, like a very severe downturn on deposits or loan repayment. So definitely your reputation will be at risk. And then on top of the cash, on top of the short-term investment, you will need to consider, I hope you have some lines of credit that were available or other means. Even you may have to sell some assets. So, and then assess whether it's short-term or long-term. So discussing yesterday with George, he asked me like some more actions or let's say some examples. So this is what we prepared in the next slide, trying to do it more practical for you guys. As I said, usually a contingency funding plan is customized to each SACCO, but now I'm speaking more like in general terms. So on the cash inflows, monthly inflow of savings, I don't know what it is estimated at now. I don't know if savings are still coming in your SACCO. I guess I would assume so. Some is still coming in. The loan repayment, I don't know what it is now, but definitely you should reschedule the loans for the borrowers who have lost their income. You also should inform your officers, your loan officers, of which economic sector is impacted. Okay. And also orient them towards loan recovery of larger loans and the recovery of loans that were made to people with wages. Also, I don't know what's going on with the remittance from your diaspora that is either living in North America, or Europe, government allowances. So, is it still coming in? Is it coming in straight to you or through a transfer, a correspondent? Do you have money lying there? Do you have money lying with the mobile money accounts? Also, if you're employer-based SACCO, what about the employer? Is he remitting you the money? You should try to get the salary deposit right away straight into the member's account. On the cash flow, you should eliminate all the non-essential expenses like purchases, equipment, delay. You should, I know that Ravel spoke of paying the dividend. Myself, I would say eliminate or reduce dividend if you're in dire situation. Why? Because even myself, I had shares and bonds with several companies on the stock market now, and those companies are not paying dividends. They've all slashed their dividends. Lend only to what has been collected during the week or the month. No more. Don't lend any more than that. And lend it for short term. Review possibly the salary downward by a specific percentage. Okay, and again, reassess the cash needed and the liquidity needed. And again, a message to your members, in addition to what to the government advice and the safe and the healthy. I don't know if you're running health insurance products. Possibly. If you don't, I don't know the impact that it has on you, on this product, or a loan insurance. Digital services, again. Is it well organized? Are you making money with that? Are you losing? What is your liquidity regarding that? Is it upfront? Are you collecting the money and providing the service afterwards? And again, salary deposit account. If it comes in, the member is entitled to withdraw most of it, right? So again, liquidity are very specific regarding that. And again, I understand before I close that liquidity management is not easy. It's like you have to balance between, if you don't have enough, you can face a reputation risk. And if you have too much, you will lose income. But what you have to monitor is your members' behavior. How is it changing with the situation? And this requires like regular monitoring from both sides, like the members who save and the members who borrow. Okay? And lastly, I could say like quickly, I don't think it's in the slide, but in order to manage that, you need financial statements. I don't know if your MIS is equipped to produce them for you. You will need stats showing the projected liquidity. You will need at least a report knowing your investment short term, which rate they have, and what maturity is with that investment. You would also need to know at least the loan portfolio or the borrowed funds report and liquidity report. I hope you have some of it to help you. Today I tried to give you the big outlines of what is a contingency funding plan. And I wish you the best. Okay, thank you.
Thank you. Thank you, John. With John's presentation, what for me I'd like us to pick, linking up with Raphael, is just to understand that we must try to come up with a contingency plan. We started the conversation by saying we're at different levels of development, but our contingency plan should be, the objective should be, our goal should be as specific as possible, make it smart, but look at the regulatory framework and the SACCO policy. Let's work within the SACCO industry. I was almost tempted at some point when John was making his presentation to start thinking through between the cash flow and the members' interest. But John made a passionate appeal. While we are interested in members' interests, we should still think of cash as king to enable us serve our members. Without the proper liquidity management, it will be difficult to serve our membership. With that, then let's link up what John has presented, and I'd like the three people who are going to do the presentation to time themselves. I'll also doing my timing. You'll have 5 minutes each presentation, and when you see me on the screen, you'll know that your time is up. The first presentation we'll have, instead of Emmanuel Kofi, we'll have the Deputy General Manager of WOCCU, Solomon Ousa, who will present 1-2 things that are happening in Ghana in regard to how they're managing the crisis. Then we'll follow the flow as the first initial discussion. Welcome, Solomon.
Okay, thank you so much. I'm Solomon. I'm doing the presentation on behalf of Mr. Emmanuel Kofi. I would like to share the effect of the COVID-19 or the impact we have had so far. And one has to do with, number one, our credit unions are categorized into three. We have the community-based ones, credit unions who are purely in the community areas. The credit unions that are also at the workplaces. Then also we have the credit unions that are also faith-based, the ones that are operating from the churches and also started from the churches. So basically the effect that we have had has to do with the decline of the decline in deposit portfolio, the portfolio of some of the credit unions, because of the situation. Most of the credit unions are not able to mobilize as before, because for instance, if you contact people want to now keep their money for other activities than rather coming to save. Number two is that there is also a high demand for loans. People need money now to also mitigate their family issues and other things that they need to do. Some of our credit unions are also experiencing high savings withdrawal, and particularly the community-based ones. And more people want to withdraw to buy foodstuff, to buy other medical logistics that they will need, and which in effect is giving us a high liquidity pressure. And also, if you look at it, some other issue that needs to have been resolved is also turning into labor turnover, because the credit unions, for instance, were operating a community base. They were having staff who were working on the field to go and mobilize funds from the market women, shops, and other offices. But now, looking at the situation, those people they can't go out, because even when you go, the people are not ready to take anything. So some of the credit unions are, the board of directors are tending to lay off some of this staff, and which is also having an effect in the situation. And it's also leading to low income in terms of most of our credit unions where the highest form of income has to do with interest on loans. And because the situation is also resulting in a way such that people are not able to pay loans, because everybody wants to look at how things will think. And it's also having an effect on the income as well. And again, if you look at the credit unions operating from the churches, and now that government announced that some of the all church operations cannot go on because they are operating from the churches. They can't even open the office, because when you go, nobody is coming. Church activities, and some were doing business largely on Sundays when churches are open. So now that these things are happening, it's creating a lot of difficulties as well, and also giving pressure to the credit unions. And it's also looking at the fact that these credit unions are now turning their looking up to what the mother association can do for them. And now what WOCCU is also putting in place is, number one, to ensure that there is liquidity support. The central finance facility that we have operated for years. Now most credit unions are requesting for loans, requesting for withdrawals from the facility, and which WOCCU we have also tried to make all these things that every credit union that can, we need to serve them and serve them well. And we've also engaged government in liquidity support so that government will also be of the need to us at this critical moment. And looking at it, we realize that government has established some funds, so we have applied to the various funding agencies so that they can also assist us. Another thing is that we've also informed credit unions to halt all capital expenditure projects so that it will not put undue pressure on them. Some of the projects can be postponed so that it will not create a lot of liquidity issues for the credit union. And we've also indicated to the credit unions to reduce costs as was made in the presentation. The operating cost has to come down so that it's not going to affect the credit unions. And another thing that we are also trying to do is to increase our member education, the education to the members. so that they may understand. And I think that is one thing. People will also get to know some of the products and services that we are doing, and it is making an impact. Another thing that COA is also doing is also increasing our visibility on the field in terms of intensifying our supervision. Even though you cannot go out as before, but we are trying our possible best to contact the credit unions through our regional offices and also making ourselves more visible in certain areas that we are doing. So basically, there are a lot of challenges our credit unions are going through, and it is increasing in a number of things for us. So that is what we are trying to do. Thank you so much.
Thank you, Solomon. I know these are interesting times, still continuing capturing what's linking up what John has indicated, and clearly shows that it's not business as usual. And what you're facing is not necessarily just because of COVID, but we are in that situation whereby we're having liquidity challenges at this particular moment. Let's have the next presentation from Fode.
Thank you, George. Good afternoon, everyone, or good morning, wherever you are. And I'm calling from Gambia. We have a similar situation. It's somewhat different with Ghana, but in Gambia also we have the credit unions are into two categories. We have the work-based and we have the community-based credit unions. The bulk of our credit unions are work-based, but we still have some community-based credit unions. Since the pandemic, what we have done as management is that we went around to almost 92% of credit unions were visited by my team and myself. The purpose of the visit was to engage both management and board as to see how best to maneuver the situation we are in and what level of preparedness in terms of their liquidity, in terms of what other measures do we need to put in place. And if there are any projects that can be put off till further notice. We have done that, and last week we have convened a meeting with one of our regulators. In the Gambia, the credit unions fall under two categories. The registrar of cooperative is the custodian of the act. But again, because we are taking some deposits and using those deposits as a form of a loan to credit unions, which is the CFF, the central bank also is regulated that portion of our. So in effect, we have two regulators in the Gambia. We met with the registrar via conference, just like the similar one we are doing now, to discuss the way forward, so that we will have some guidelines and as to what we need to do. And at the end of that webinar, the registrar sent out a letter to all credit unions that because of the situation and because of the liquidity challenge they might be facing, all AGMs or ADMs are postponed until further notice. And by the same token, the central bank also sent out a letter to us that dividend payment to shareholders also will not take place this year. So all credit unions cannot, and they have that mandate from the central bank. So those are the two we have moved forward with our regulators. We still engage in them to way forward. If something should have changed, we will notify the credit unions in due course. But as far as the Apex itself, NACOB is concerned, we are monitoring our credit unions. We have engaged them, and then we made it clear to them also the CFF is an option. So far, out of all the credit unions, we just received one request from one community-based credit union to access the CFF. So, but for the most part, all the credit unions we have visited, or I have visited, said they should be able to weather the storm, at least for now, until maybe. But the fact that this is so indefinite, we don't know how long it will last. But for now, I think everything is pretty much, we are all safe. But there is no room for complacency. So we'll still keep monitoring, we'll still keep engaging the regulators, both the central bank and the office of the registrar. There is a need for more action that need to be taken. We will definitely surely engage them, and then the credit unions will be involved in that process. Right?
Thank you. Thank you, Fode, for giving us the current outlook and action points in Gambia, particularly looking at what the regulators are doing. Some of those have already been done in other countries like Eswatini and Kenya, but it's good to know that there is that effort to find solution jointly with the regulator. Let's have the next presentation by Fumbani. Fumbani, are you there?
Yes, thank you, George. Once again, thank you for organizing this, and also thank you, folks from World Council. Let me start from the presidential directive that we got in this country that destabilized the financial institutions a little bit. Not that much, because it was a requirement that all financial institutions give a 3 months moratorium on loan and interest repayments. So it was just that 100% moratorium. But the good thing is that he asked the registrar of financial institutions in this country, being the governor of Reserve Bank, to engage with all the sectors of the financial institutions, including ourselves, to see how best this can be implemented. Now, the whole of last week, we were trying to engage the regulator and all the financial institutions. We agreed that the moratorium is important during this time, but it should be implemented on case-by-case basis. And that has been taken. And you can imagine, if you're serving the rural communities like we do in our case, it was quite a big challenge in most of our credit unions. So now the position, when we look at what we've agreed with the regulator in a number of areas, apart from implementing the moratorium in that case, which is also in a way bringing the liquidity challenges. There are a number of good things that the regulator also helped us to see how we can manage liquidity in most of our circles. The issue of restricted dividend. Actually, the regulator said no declaration of dividend during this time until maybe the situation eases up. No capital expenditures unless maybe the regulator can approve, just to make sure that possibly we are able to manage liquidity in our circles. And the regulator also, on the financial sector front, especially on the banks, the regulator reduced the liquidity reserve requirement by almost 2 basis points, and that meant that liquidity being released to banks, and then banks also reduced a little bit on the interest in case maybe financial market players want to borrow for own lending to members or to their clients. In this case, I'm referring to SACCOs or microfinance institutions. So the regulator also did that. The regulator also negotiated with the mobile network operators on the reduction of transaction fees, so that if we have SACCOs that are transacting using the mobile technology, then they should be completely zero or maybe very reduced charges, just to make sure that maybe the SACCOs also are transacting more using the mobile technology. Those are some of the things that the regulator has helped the system. Maybe the other issue that we're still discussing, we lobbied in terms of relaxation of some of the compliance standards during this period, knowing that we'll have liquidity challenges throughout the system. SACCOs need to be, there should be some relaxation on how maybe we want to look at some liquidity ratios, the capital ratios, delinquency ratios, and all that. Whilst we're still managing them, but we shouldn't face that heavy hand from the regulator this time, knowing that it is, as somebody has said already, it is not business as usual. Now, what has been our, like the MOSCO through our Central Finance Facility, what has been our observation and possibly how we're trying to help the SACCOs across the country? More or less like my colleague has reported for there is a looming demand. I mean, the everyday increase in terms of loan demand in most of our SACCOs, especially the rural SACCOs. In the rural SACCOs or community-based SACCOs, that's where we're having huge liquidity demand. Increase in loan demand, increase in deposit withdrawals. We're seeing that mostly in the rural-based SACCOs. There is a moderate increase on the same in employee-based SACCOs currently. But when we do the projections, if this possibly situation or the pandemic continues the next possibly 2-3 months, when we do our projections, we see that we'll have quite a substantial deficit in terms of liquidity. And discussions amongst ourselves and the SACCOs has been how best we can manage this, and mostly what we are advising SACCOs is the review of their policies, just like the presentation has demonstrated, the liquidity, the loan policies. We're encouraging short-term loans. We've also said most SACCOs should not get into, should stop temporarily or put on hold long-term loans to do with the capital expenditures. And also maybe review their asset liability policies. And this is what we're trying to advise SACCOs. And also we're trying to set up a forum where we can want the managers to discuss in terms of how they want to support each other as a SACCO system. For example, some SACCOs might not be affected that much, may have excess liquidity even during this time, whilst the other SACCOs will be having a liquidity deficit. And we have a forum through the Central Finance Facility that we can be able to bridge this so that we're still helping each other's SACCOs, a SACCO helping other SACCOs. These are some of the interventions that we're working with SACCOs. Currently, we're still having the demand from the SACCOs to the CFF, and we're still helping them, just like my colleague Fode has said. So those are some of the issues that are happening here. And I see George on the screen, means my time is up.
Thank you, Fumbane. Thank you, Solomon. Thank you, Fode. In essence, we've all realized that with those measures that you are undertaking or the impact, I think one of the roles of a national association is continuously asking the governments to see that SACCOs or the credit unions are recognized as providing essential service, like what has happened in Eswatini. I think it's a wave that we should try and see that it's happening across the continent. We are a little bit lucky at the moment that the impact of COVID or those who are getting affected are relatively mild, and we just hope that it will continue so, or it will end before it gets into a worse situation. So thank you to the three of you. We'll have some polling questions as we proceed on in the next phase. So Solomon, Fode, and Fumbane, thank you for that input during this webinar. So the next presentation, just to help us manage time, because we've also had conversation from various quarters, I'll ask Juve, who will speak, and Solomon and Ngutsa from Kenya, Juve from Gambia. We'll only have 5 minutes to just pick one or two of those things that you think hasn't been discussed or you want to emphasize instead of repeating. Just 5 minutes. So we'll start with Juve, please.
George.
Yes, please, Jeff. Go ahead, please. You
Am
have
I
5
off
minutes.
or online?
You're on, please. Proceed on. So you have 5 minutes, then Solomon will also have 5 minutes. Then you'll have a wrap up from John. Thank you.
I'm on, okay. Thank you very much, George. And right, thank you. Okay, it's Juf's turn, not Solomon. Yes, just two interesting things about managing liquidity in the context that at our level, we are cash-based. We are not doing any wallets or electronic cash transfers. Everything is cash-based, and we are doing this from 8 outlets across the country, which exposes us more. And because we are doing salaries for education staff in this country and beyond, we actually saw a very, very, very sharp demand on money, because in the Gambia, people panicked. There was panic buying, so people were stocking foodstuff for months. As a result, the demand on money was extremely high. But yeah, we've dealt with it so far. One of the strategies we have is our short-term investments in the banks were converted to what we call accounts, so that we generate revenue on them at a lower rate, but then they are accessible as and when we need them. We have not been to the CFF yet. I don't even think we will be in the short term. So that's a very interesting one, and it's working well for us. All the other things like cutting on expenditure, cutting on travel, non-essential expenditure, all these things, putting capital expenditure at bay, all these measures we have put in place. We have another strategy which is interesting. Because of this panic buying, food was the most prominent. We observed that. So we have an arrangement with some food suppliers, some vendors, through our consumer cooperative. And what we do is we are pushing more of food items to the members if they are interested in money to go on and stock their stores to ensure their families will be fed. So that way we are also reducing the amount of cash that is going out now. So that helps us control our outflows. It also gives us an opportunity to call money in whenever we need it. Again, for now, we have not been pushed to that corner. Solomon, we are coming, negotiating with GamSwitch, with the Central Bank of the Gambia to ensure that we are now having a push factor to go electronic, George. Let's see what happens before the end of the year. So thank you very much, colleagues.
Thank you, Joe, for that input. Let's hear from Solomon also briefly. Solomon?
Hello, can you hear me?
Yes, we can hear you. Go ahead now.
Okay, George, I think thank you for allowing me to speak in this WOCCU ACCOSCA webinar, and also give me an opportunity to speak with the whole of Africa. Thank you for all the presenters who have come before me. I think the presenters have been very nice. I'll only touch on one or two things which we have missed on. One, but George, because of time, I'll talk about, SACCO model is an inclusive model. So we gain more, or we'll intend to gain more by aligning ourselves to the model, because if we don't work together as a country, as a continent, as a world, then this thing might be a bit tricky and overwhelming to us. So as a model, as a movement, like if I give an example, like in Kenya, when this happened, the whole entire movement came together, just put the issues together, discuss through them, and just figure out what to do. And one of the things that came out is the ministry and the regulator agreed on certain things. I know I've heard of some places where AGMs have not been done, so dividends cannot be paid. for us in Kenya, you know, when we talk of liquidity, we are talking liquidity in two perspectives. One, the SACCO need to have money to be able to continue serving members. Two, the members also need liquidity in their pockets to be able to go about their normal daily lives. So in Kenya, we were allowed by the ministry and the regulator for those who have not held AGMs, which can no longer go on because of the challenge of COVID-19. Once your accounts are approved and they're registered, you're allowed to pay dividends so that at least members can have money in their pockets. That can be ratified in the next annual general meeting. On the same note, George, the movement has also come together and set up a committee which is called Cooperative COVID Response Committee. And this committee is looking into the people or the population or the cooperators who have been hit hard. Like in our country, the hotel industry, some of them have closed. The employers have cut their salaries or they have taken unpaid leave. So basically it means these are people who will not have even food on the table. So the COVID Response Committee is raising funds from the movement to be able to see how they can be able to penetrate into the whole country, just to check on those who are vulnerable, those who have been hit hard, so that at least, even if they don't have money in their pocket, they can be able to put food on their table. Two, I think this one is also a wake-up call by George. I think we've been talking about coming together, pulling our resources together through national associations, the central finance program. We should also be thinking of crisis funds programs, so that during such kind of crisis, we should have a fund that should be able, should be there. And I think this works well with already the structure that exists, where we have national associations, which can come. And because during the times we are happy, we have money, we can basically be able to save, so that we are able to pull together for such kind of crisis, because these things will keep on coming. We are in the world, we've had several pandemics, and I don't think this COVID-19 is going to be the last pandemic. We'll still have others coming. So as a movement, we need to go back to our drawing table, think through and figure out how then do we able to address this. We also have in other areas, George, I think we need to push more in terms of financial literacy, education and training, one of the key principles of cooperatives, of importance of savings, because savings comes in handy at such kind of moments. And when I talk about savings, I'm not just talking about the normal savings or the ordinary savings, I'm also talking about other lines of savings. Even a saving that during such kind of a time when this is raining, somebody can fall back to it and are able to. So we need to fall back in the area of literacy, financial literacy, and just drum support and drums the importance of our people being able to save as much as possible. Because I know we've fallen too much into consumerism. We eat all the money we earn or such kind of things. Some of the members are more inclined to borrowing than savings. And I think as SACCOs, we need to create some kind of innovation around savings and what kind of savings we need to bring on board. George has continued, I think, from the society side. I think for many years, we've really talked about the importance of building capital. And capital is one of the key fundamental factors that can caution a society against risk. When I talk about capital, I know capital is in two ways where members contribute, but there's capital a society can create easily by reserving part of the surplus the society makes. So instead of just paying all the money into dividends, of course, I know there's a lot of push around dividends in this sector, but we just need to figure out how then do we need to keep preserving, every year we preserve, so that we have enough capital. I'll tell you, for the case of Kenya Police SACCO, I'll tell you, liquidity is not a key issue now. Of course, I've observed the lending has gone down. So it leaves me with much liquidity. So basically what it means, the challenge now I'm facing is, how do I create more money? Or how do I create revenue out of this? But it's a good thing, because at least I know anybody who needs money coming to borrow, I should be able to give them the money. So capital is a critical thing. And I think we need to look at this, George. And going forward, we need to go back to the drawing board and just figure out, how do we bring this agenda on the table, and how do we practically make it possible that our are adequately capitalized. Of course, if it goes worse, George, we are playing in the financial sector. And in the financial sector, we also have other financial players, banks are there. At the SACCO, you also need to figure out, your banker, you could have a credit line that will help you sustain your business so that you can continue moving on. Of course, George, as I finish, I think one thing we are realizing during this COVID-19, technology is no longer a luxury. Some of us now, we are working from home, 50%, because all of us, we need to do social distancing. We are also trying to support the government directive on helping to flatten the curve. So we are seeing technology has becoming very handy. And societies who have invested well in technology, their members are still able to transact. The society are still in business, making money. Members can apply online for loans. They can still access their money online. So while whether you are home or not, George, such kind of societies are still in business. So the challenge for those who are not yet there, they need to start now figuring out. Of course, I know technology is not cheap. As we move into the future, we need to figure out how even what we could call shared services in the area of technology, apart from other services, so that we are able to, so that all our members should be connected through the kind of technology we also, either the government or the societies within that a particular region have invested in, so that even when we have such kind of pandemics, George, we are still in business. We can be able to provide services, and members can still go about receiving services from the business. I think, George, I'll stop from there.
Thank you. Thank you. Thank you. Thank you, Solomon. I know this sums up our webinar on liquidity management. I'll just mention 2 points, then I'll leave John to wrap it up with a closing remark. My comment is, I'll make 2 comments. One is to say, with what Solomon has spoken about in terms of let us be more proactive other than reactive, the same points that have been discussed by Raphael, the same points that have been articulated by John. One of the key things that we need to realize that COVID-19 is a disruption, and there are many other disruptions that will still come. So we need to find a way of being more proactive by developing things that might help us. Let us go back to rethink through the slide that John gave in terms of contingency plan, what the objectives that we need to have, the goal, the framework, and we work through the policies. Those will help us such that even post-COVID-19, if any other disruption come, we will find ourselves in better state. Then the second point that I'd like to state is that with this kind of conversation, most of us being technical people, there are many CEOs in this webinar, just a few of the board chairs. One of the things that ACCOSCA and World Council will be doing in the next coming weeks, we are still continuing to pick the discourses that will help us strengthen our ability to serve people in the continent and globally better. So expect more of this conversation, or they expect more of invitation to contribute in further discussion to strengthen the movement in the continent. Let me ask John to give his closing remark. being that he was a keynote in this particular webinar.
Well, thank you, George. Well, I must say I was quite impressed by the speaking of everyone. I'd like to congratulate all the National Association leaders. I mean, they're doing the right thing, engaging in dialogue, discussions with their member credit unions, and at the time with the regulator. Most of them, it was nice to see because most of them put in practice what was laid out in the presentation. I also like very much the fact that the whole sector is reflecting, just like Solomon just said, like, are we well equipped? Are we equipped enough to face the same kind of situation in the future? We'd be keen to listen more to the Central Finance Facility, how they're doing, how they're managing. I'm speaking out of Canada. Here, every deposit account is guaranteed up to $100,000. So you don't have savings guarantee scheme in Africa. You don't have mechanisms that can either support the lending or the savings. Would there be a fund crisis? Possibly. I know that there are different organizations. The financial sector related to cooperative is quite specific in Kenya, from Co-op Bank, CFF to other credit unions. Everyone has a different model. That's what I think. The best way to do it is still, as you've done, dialogue, reflecting, action. Myself today was happy to contribute with this. I would be curious at the end to find out if you have the right tools to measure your liquidity, if you have the right tools to prepare your contingency funding plan, if you have, if you would need that sort of things. Thank you all. I was impressed personally.
Thank you. I'd like to thank all of you who contributed, the panelists, the ones that I haven't mentioned, like Solomon, Fode, Fumbani, Juf, Solomon. All of you, you've taken the time to give us a view on what is happening, and I think we can dig it further. We can develop more research, think through how to come up with solutions. Lastly, as we close, I'd like to thank the World Council. Sue, has played a key role to see that we're having more of these conversations. So we really appreciate this kind of engagement. I know there's a gentleman who is behind the scene who is making everything happen, Connor. We really appreciate that you've been able to step in to support us throughout the phase. I know World Council has a new team in Nairobi, and they've also been very active to support us. There's Mark, who is working behind the scene. We were meant to have had some pollings questions, but I know because of time, we'll figure out how to address this in the next sitting. With this, I thank you all, and we look further for more conversation. The recording for this particular webinar will be on Facebook, ACCOSCA Facebook, might be sent to you if you need. ACCOSCA website, you'll probably just give us a day and you'll have it available on all the social medias and all the platforms for you to share with your team. We wish you well, stay safe, continue living the spirit of people helping people. Thank you.